What's up everybody? Welcome to the Stocks channel. My name is Corey and today in the stock market we had a very impulsive rally off of the lows and it looks like we're starting to see the bulls back out there buying the dip. Does this mean the downtrend is ending? First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today we had a very interesting day with SPY closing up 2.48%. And we saw a very impulsive rally off of that support level at 428. Remember, just yesterday I told you it looked like the sellers were getting exhausted and that support level was holding up. And I asked the question, are we about to go turn the corner? Well, the rest is history and you can clearly see the sellers were drying up at that support level and the bulls started charging in a very fierce way. And we had a very bullish engulfing candle closing at the high of the day and fully engulfing yesterday's price action. So when you see a candle this bullish, it's definitely something you don't want to ignore. Now, does that mean you should start chasing this price action? Well, not so fast. So you still need to be very cautious at these levels, and we still do have a market that has very high volatility, and you can clearly see SPY is still below the 200 simple moving average. So don't get overly bullish, even though this is definitely an incredibly bullish day, and this was definitely incredibly bullish price action. You have to remember that the stock market was getting way too oversold, and sometimes these dead cat bounces and counter trend rallies are very impulsive. So yes, I do think we can go higher from here, and yes, I do think SPY should be testing resistance at 450, and then if we can break back above that level, we'll be looking a lot more bullish, but we still won't have confirmation that we're back on the bull until SPY breaks out back above 460. So don't just start chasing this thing if you miss this rally, because what's more than likely going to happen on Monday is we're more than likely going to see price action gapping up and then starting to run. It's going to cause all those people that were shorting this market or waiting for a buying opportunity to jump in. That's going to lead for a very impulsive rally. And then we're more than likely going to see the stock market puking right back down, back to support and retesting these levels. So remember, this is a very difficult market to trade, and I can tell a lot of you are getting very emotional, and a lot of you were even expecting for an end of day sell-off today because the stock market has programmed you to think that the stock market can never go higher again, and it wants you to get overly bearish, it wants you to completely miss the next bull rally, and it wants you to think we're going into a bear market and there's no way the stock market can ever go higher again. If that sounds familiar, then the price action is currently working against your emotions and you're not staying objective. As far as we know, this is a stock market correction because we've only drawn down about 13% on SPY, and anything between 10 to 15% is still a stock market correction. So if you don't think this bull market can go higher after this correction is complete, then you are losing the game of emotions and you're not staying objective. And I've gone over this many times on my macro level charts, and if you're in the Stocks channel Discord, you know the significance of SPY 420, and you should never forget what I told you about that level, and the same exact level goes for the triple Qs of 334. If you let your emotions confuse you and you let your emotions take over because the market's being volatile, you will absolutely get crushed by the market this year because it's going to be very volatile and it's going to include a ton of whipsaws. So heed my warning that this impulsive rally is not likely just going straight back to all-time highs. There is still going to be a ton of chop and a ton of whipsaws and bull traps and bear traps alike coming out of this hole. I've traded markets like this many times and I've seen this many times, and I can almost foresee exactly what's coming in the very near future. So believe me when I tell you this is not going to be an easy ride coming out of this hole. So if you're still messing around with options and you think you've got this market figured out, if you're not being profitable, it's time to reconsider and start sticking to a strategy that works. So watch this very critical level on SPY at 442. And if we start breaking above that level, you're looking for a retest of 450. Don't rule out the possibility that we did see the bottom, and I already made a video about that bottom when we saw the reversal, and there's a lot of people that keep comparing that reversal pattern to bear markets, and they keep forgetting that we are not in a bear market. So comparing something that happened in a bear market to something that happened in a bull market is not necessarily the best approach. Now that we see price action getting back up to this 200 simple moving average, we're going to see the ultimate test in this market, and that level will be strong resistance. So if we start to pull back, you're looking for support levels at 439, 436, and 428. And you really can't expect any more downside until the bears can prove they can see price action breaking below 428. And until the bears can break below 428, I think you should be leaning towards the bullish direction. Some of you think that's crazy that you could possibly be bullish off of a support level, but that's your risk level. If you can't take a long trade off of your defined risk level, then you really don't understand risk management at all. Because if you're buying at your risk level, the worst case scenario is that you're wrong and you take a small loss. So if you're setting your risk at the proper levels that I'm giving you, it doesn't matter if you're taking long trades or short trades, you still need to use risk management. So if you listened to what I said and you took a long trade and you set your risk on a close below 428, you absolutely crushed the market today, and congratulations, because you did exactly what you're supposed to do. So don't be afraid to short this market and don't be afraid to go long in this market. Just use proper risk management and you will continue to crush this market. So on SPY, we're getting a lot more bullish above 450 and 460, and we're getting a lot more bearish below 428. And right now it looks like the bulls are taking over control, but that doesn't mean we're just going to have a smooth ride to the top. So stay objective and follow that price action and know these critical levels. Jumping over to the NASDAQ 100 triple Qs, you can see we had a very bullish day today, also with a bullish engulfing candle going up over 3.1%, and we closed back over the 5 EMA. So we have definitely seen price action that could be starting to snap this downtrend, because the whole way lower we were closing below the 5 EMA and now we're starting to close above it. However, you can see we're still a long ways away from the 200 simple moving average, and we still have plenty of resistance to break out of to the upside. So on the triple Qs, you're looking for resistance right around 353 and then 360, and the 200 simple moving average is just above 365. The bullish breakout is back above 370, and that will be a very bullish breakout when we do see that price action. So just like I said with SPY, don't necessarily think the bulls are all in the clear and we're just going straight back to all-time highs from here, even though the bulls are starting to take back over control from these support levels. So your critical support levels on the triple Qs are down here right around 341, and then below that, the most critical level of all at 334. And below 334, unfortunately, you are going to see the triple Qs in a bear market. But as I always say, let the price action prove it to you. This is not a bear market. This is a stock market correction. So there's no reason to assume that we're going into a bear market until the price action confirms it. So use proper risk management and watch these critical breakout levels. And right now you have to give the benefit of the doubt to the bulls in the short term, because you don't get a candle looking this bullish without a significant amount of people buying the dip. And as you know, Apple earnings was very good and Apple leads the market higher. And when we get to Apple later, you're going to see that Apple is giving us a lot of signs that the market does want to go back on the bull. Jumping over to the Dow Jones, you can see we were up 1.63% today, and the Dow Jones also had a very bullish looking candle, but we didn't take out yesterday's high. We got rejected right here at resistance at 347, and the 200 simple moving average is just above at 350. So your bullish breakout levels will be 350, 355, and then you do have a gap to fill at 356. When we break back above about 357, that will be the bullish breakout, and we're more than likely going to fill the gap at 360. Remember, use the Dow Jones as an indicator, because right now you have two gaps to fill on the Dow Jones that take you all the way back up to 360. So if you're expecting a bear market and you're expecting another leg lower and you're expecting to see the stock market spiral out of control to the downside, ask yourself, when are these gaps going to fill in the Dow Jones? I think you should be looking at the stock market as a whole and not just looking at one component of the market. The Dow Jones has a lot of upside to close two of these gaps, and it's not a question of if these gaps get filled, it's just a question of when. So use that as an indicator, because right now, if the Dow Jones starts marching higher, I'm looking forward to those gaps getting filled, which is going to mean the rest of the stock market is going higher as well. Now to the downside, you have a bearish breakdown below 340 and 338, and below 338, you're looking for a retest of the low at 331.5. On the Russell 2000, we were up 1.95% today, and we see the Russell 2000 is still looking extremely weak with a very strong bear trend, but that support level at 191 did hold up. Remember, below 191, we're going much lower, and on the way to 170, we will have support at 183. Your bullish breakout levels are back above 205, and then back above 212. And when we get back above 212, you'll be looking for the next breakout back above 219. So keep in mind, this is definitely a bear market, and that doesn't guarantee the rest of the market has to go into a bear market, because the small caps have nothing to do with the large caps, and the small caps can go lower while the large caps go higher. So don't think the small caps going into this bear market is predicting anything, and you're more than likely going to see the support level holding up and a very strong counter trend rally, because in all bear markets, you do have a very strong relief rally. On the Arkk ETF, we were up 3.89% today, and we do see Arkk closing back above that support level right around $66, but this is still very clearly a very strong bear trend and a very strong bear market. There's no reason to get bullish on this ETF until you can at least see a decisive breakout back above 75 and then back above 85. Back above 85, you still need to get back over that 50 EMA, so we will need to close back above 91. This is a downtrend until it's not, and it is a very strong downtrend, and I'm still not sure that we aren't seeing Arkk trending down towards $60. So look for that breakdown below 66 to see a confirmation that we're heading to 60. On the VIX, we were down over 9% today, and we're starting to see the VIX getting crushed, but we still have a bull trend in the VIX, and we're still above 24, so we still have to expect plenty of volatility and plenty of whipsaws. It's not until the VIX gets back below 24 and then closing back below 20 that we can start to expect to see a bullish smooth rally. So expect to see plenty of whipsaws and plenty of volatility because we still do have an elevated VIX. On Bitcoin, we're currently up 1.5%. We see Bitcoin trading right around 37,000, but we need to see breakouts back above 38,000 and then back above 41,000. Back above 41,000 will be a very bullish breakout, and then the next bullish breakout above 41,000 will be back above 46,000. To the downside, we could still get rejected at 38,000 and come down to support at 30,000, and below 30,000, you're looking for a retest of 20,000. On NVDA stock, we were up just over 4% today, and we did close back above the 200 simple moving average, so the bulls are trying to hold that level as support. It's not something I really talk about, but there is no doubt that NVIDIA stock is in a bear market, drawing down about 38% from the all-time high, and clearly in a very strong downtrend. So when you're in a bear market, there's always going to be the possibility that you eventually hit a bottom, and in NVIDIA stock, I want to go ahead and tell you that I think the bottom is either going to be 209 or 192, but there's no guarantee we have to get to 192. So there is the possibility we did see the bottom in NVIDIA, which is right around 209, and we do have earnings coming up in about 2 to 3 weeks. So if you wanted to take a long trade off of NVIDIA, knowing that you're bottom fishing, you can set your risk level at 209 and then below that at 192. And you still have to remember this is a very strong downtrend and you are going against the trend. I really wouldn't suggest shorting NVIDIA stock because it is a very strong blue chip tech company and it's already gone through a massive bear market, so we could be seeing the bottom very soon. So watch these support levels right around 221 and 209, and if we break below 209, watch for support at 197 and 192. And yes, I do think one of those levels will be the bottom before we see more upside. Now the bullish breakout will be back above 253 and then back above 271, and back above 271 we'll need to break back above about 281. That will be the bullish breakout, and that will signal the all clear that we're going back into a bull market, and we could still see NVIDIA forming new all-time highs this year. On Tesla stock, we were up 2.08% today, and we did see Tesla testing the very critical support trend line right around 792, and we did bounce off that level. So far, the price action is holding up above the 200 simple moving average, and very similar to NVIDIA stock, it's possible that NVIDIA is trying to put in a bottom before another bull cycle. So these are levels that if you are a Tesla bull, you will want to consider accumulating at because you are getting very good prices and very good risk levels for long trades at these levels. So watch that 200 simple moving average as support at 814 and the support trend line right around 790. And if we start getting bullish breakouts back above about 960 to 1000, you will see another bull cycle in Tesla stock. And yes, we could see another new all-time high. However, if you start to see price action closing below 814, it could be heading into a bear market and we could see a lot more downside. So protect yourself to the downside if you see Tesla starting to close below that $800 level. On Apple stock, we were up almost 7% today, and this is definitely going to be the most critical puzzle piece to the stock market going into the next couple of weeks. So you have a lot of bearish scenarios out there that said the stock market was going down for another leg lower and that we were not done correcting. And there's even a lot of people out there saying that the stock market has to go into a bear market and it has to crash. If that's the case, then why the hell is Apple up 7%, closing back above all the moving averages and getting a very impulsive rally after earnings? This is exactly why you need to stay objective and don't just follow the herd mentality, because if everybody's expecting the stock market to crash, it's more than likely not going to crash. And right now, Apple is signaling that we could be going right back into a bull market. This is extremely high volume buying. This is an extremely bullish candle. And as you can tell, the price action is back above all the moving averages. So we could be seeing the very first impulse on Apple stock that sends it right back into another bull market and could send it right back to a new all-time high. Remember, I told you Apple stock was going through a correction with the price targets at 157 and 153, and we clearly saw the correction ending at 157, and we're going right back on the bull. So as I always tell you, Apple is a market moving stock, and there's no way I'm going to ignore the fact that Apple is breaking out, taking out the low that we had back here on January 10th, and decisively closing back above 168. So in my opinion, this is the number one signal that the stock market is actually going right back into a bull market, and it's happening right before your eyes. You can either choose to believe this indicator or you can completely ignore it. But if you're ignoring this, I think you're missing the whole entire story, and Apple is starting to give the all clear that we're going right back into a bull market. Now, all of this is subject to change, and if you start to see Apple slicing down through some of these support levels, you will want to get a lot more cautious. So watch for these support levels on Apple stock at 168, 166, and then right around 162. If we start breaking below all of these levels, that will be the possibility that we're going to eventually come back down to 157. But if we hold up above any of those support levels, that's going to be the next higher low before we form another higher high, and that will be the all clear we're going back into a bull market. So the next couple of weeks are going to be very critical because we're going to see all the price action we need to decide exactly where the stock market is going over the next couple of months. Watch Apple stock very closely because it is the most heavily weighted stock in SPY and the triple Qs, and it's not something that you want to ignore with today's price action. Now the next bullish breakout on Apple stock will be back above 172 and then back above 176. On the financial sector, we were up over 1.3% today, and we're still holding up above that 200 simple moving average, and we still have a gap to fill above at $41. On the industrial sector, we were up 0.7% today, but we still see a lot of bearish momentum and price action below all the moving averages. On the healthcare sector, we were up over 2% today, and we did close back above the 200 simple moving average, so we could have seen the bottom of the correction, and we could be going back into another bull cycle, and we still do have a gap to fill up there at 141. The energy sector was down 0.42% today, but we still have bullish price action and we still have a bullish trend. I would not start buying energy at this level until we can see a decisive breakout back above 66.5 because there is the possibility we need to come back down and cool off a little bit and close some of these gaps below. So jumping back over the S&P 500, there is definitely a lot of bullish price action we saw today, and it definitely looks like we could be turning the corner. Watch those very critical support levels below and make sure you're just using proper risk management. I don't care if you're shorting this market, and I don't care if you're going long in this market. You need to use proper risk management no matter what direction you're trading in. And with all of this volatility, you can't go wrong trading in either direction as long as you know your critical resistance and support levels. Short at resistance or buy at support, it doesn't make a difference to me. If you're an investor, don't obsess about catching the bottom. These are great buying opportunities, and you can always set your risk levels accordingly. Don't let anybody scare you out of buying, and know your plan accordingly. If somebody is trying to scare you out of buying because they're comparing the stock market to 2008 or 2000, tell them that you have proper risk management and you're going to do whatever the hell you want. Don't worry about what other people think. Follow your own plan and go with your own convictions, and continue to stay objective and follow your plan accordingly. These are great levels in the stock market to consider doing anything, whether you be trading and investing. And you can go back to 2020 during the crash in March of 2020, and you can see all of the people that wish they bought more at the bottom. So don't let fear make your decisions, have your convictions, and know your plan and act accordingly. Also, don't forget that I do have Bank Trade Alerts, which is an algorithm-driven trade alert service that sends all of your buy and sell alerts directly via email and text message, and only trades the ETF TQQQ. With all this market volatility in a brand new trading year, now is the best time to be a Bank member. You could see that even in a bear market like 2008, Bank beat the market and made over 90% that year, and Bank has never had a negative year. You can find out all of the information and how to join Bank Trade Alerts by clicking on the link in the description of the video. I also have the Stocks Channel Discord where I do intraday updates and analysis and bring new trade ideas to you weekly. If you're interested in joining the Stocks Channel Trading Discord community, you can find out how to join the Discord server by clicking on the link below. So thanks for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.